Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Tuesday, August 8th, 2023. Before I jump into the charts, as usual, I just want to encourage you to please click like, please share the content if you would with friends and colleagues. Please become a wickedstocks.com, I'm sorry, a Wicked Stocks YouTube channel subscriber. And yes, wickedstocks.com. Please check out wickedstocks.com. We offer a full suite of both daily and weekly analytical videos, just like the daily Tesla report. Every day analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that are in 5 to 10 minute video format and cater to the 3 to 5 week swing out to the 3 to 5 month near term investor. Always looking for 20% swings on those, 20% moves on those underlying stocks. And you've got a 5-day free trial. Just on Monday, we put out a stock pick on Amgen, the biotech company. You may be interested in that. Offer a 5-day free trial up front. If you don't like what you see after 4 or 5 days, you can bow out at no cost to you whatsoever. So on with the Tesla report. Let's take a look at the charts, the big picture, work our way into the day itself. Just a reminder, two things here. Long-term buy signal 3 months ago, roughly above 179.70. That set off the likelihood, I think, over the months ahead. I don't think by the end of the year anymore. I'll get to that in a moment. At one point, I was thinking perhaps by the end of the year, we could retest the 414.49 November 21 high. We do need to get up and over our initial midterm objective, a 2 to 3 month objective that is now at 296.65. This formation has performed pretty well over the last couple of months in containing buying pressures all the way through July and into August trade. In fact, about a month ago, we pushed through this significant channel top significantly on an intra-week basis, only to come tumbling back later that week to close negative on the week. And so the question is, will we fall to the channel bottom that is presently well below the market in the low 200 area? And the answer, as I've been saying, is this is a daily chart, by the way, the same exact structure, but on the daily chart would be yes if we close below this 247.50 rising 1/3 speed line. A line study that we tested for the first time actually on Monday. We slipped below it, did not close below it, and as long as we continue closing at or above this rising 247.50 speed line, this market is poised to rotate back up to the 296.65 channel top. The timing of that could be 2 to 3 weeks. It could spill into September. It's a tough call, but that is really the image that I would present. This is kind of what I would call the 2 to 3 week dynamic. 247.50 support, above which the more meaningful 296.65 resistance in reach over the next 2 or 3 weeks. And inversely, if we close below 247.50, we should test this 207.14 longer term channel bottom that stems back to the January low within 2 to 3 weeks. Along the way, over the next week and a half, 2 weeks, it actually converges with that February 217.65 high. So that's worth noting. Now we can zoom in just a little bit and take a look at the day itself and into later week. We've tested meaningful support at 247.50, above which, and as I've been saying, as we test this speed line, if you want to reach for 295 or 300 out of the money calls that don't expire for at least a month, you may go a couple of months out on that. That is still the play, and that was the play on Monday and will continue to be the play so long as we continue closing at or above 247.50. Now, in terms of buy signal clarity to the upside, in terms of recovery as we move into later week, that would come with a settlement today above 262.50, a new descending channel top that is based in part on Monday's low. It can contain session strength. And in fact, I'm going to zoom in one more time here and take a look at this chart. I do like Monday's high of 253.65 as our upward pivot point for the day. So you can see here to the right, I have that as an intraday resistance, able to contain intraday buying pressures, and below which we can retest that 247.50 speed line on an intraday basis. If we push or open above 253.65, we should test 262.50 intraday, where a daily high can be placed. And 262.50, 3 to 5 day swing trade? Not quite with this volatility. This is more like a 1 to 2 day swing trade. What I'm saying is we could top out at 262.50 for the day and perhaps fall back tomorrow, Wednesday, to 247.50, filling out this wedge a bit for the next day or two. But of the two that is likely to give way, I do think it's 262.50 that is likely to give way to buying pressures above 247.50. And I say that by a degree. It's not clear cut. And if we do close today above 262.50, I think we have a good low for the week. 3 to 5 day swing traders go long. Now, 3 to 5 day swing traders may have been bottom picking 247.50 anyway, and maybe unload some of that long position at 262.50. But I'll say that if we close above 262.50, we have a green light, I think, for the rest of the week. And over the following 2 to 3, 3 to 5 days with present volatility, we could test 283.39, which is a new descending channel top based in part on Monday's low. And I've got it weighted as a weekly resistance area, able to contain weekly buying pressures. I will say, though, as I've said already in this video, that holding above 247.50 will keep 296.65 in reach over the next 2 to 3 weeks. And if we close today above 262.50, I think it's more like 2 weeks with a week of containment on the way up at 283.39. And certainly if we were to close above 283.39, we reach 296.65 quickly, possibly the very next day. But I don't want to get too ahead of myself here. I want to say that closing above 262.50, 283.39 becomes a 3 to 5 day target where we can top out well into next week and fall off again. And so there's that, I think, really to the upside. As for the downside, I will say that if we break that 247.50 speed line, this is the chart I think I would show. We came close to testing 240.70 on Monday. Not quite, but 240.70 is still there. Nothing more than that pullback high. The gap is at 235.23 going back to early June. And so if we break 247.50, 240.70 in reach, we could bounce there on an intraday basis. If we break 240.70, 235.23 is likely where a daily low can be placed. But if we do settle, as I said earlier, below this 247.50 speed line, we've got a 2 to 3 week sell signal to 207.14. And so if on Monday, after testing the speed line, you reach for those 295, 300 out of the money calls, and if they expire inside of a month, I would recommend covering them because I think over the next several weeks we will continue south to 207.14. That said, you may reach for 208 or 210, 215 out of the money puts that don't expire for at least a few weeks. You may go a month out on that just to preserve delta and reduce the theta time decay element. Is there anything else to say? I think I've covered it all, pushing 8 minutes here. I'm going to leave it at that for Tuesday's Tesla Report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great evening.